All right, what's up, everybody? It is July 26th. This is probably getting posted in a couple days. It is a Saturday. Brian and I have both been running and gunning so hard in this industry that we didn't get our normal call in the first couple weeks. So here we are on the last week of July. We're literally days away from August, and we want to just talk about what we're seeing in the market. You know, what are some things that might just give you guys some insights into where's the puck going? Like, if you're an executive, if you're a loan officer, like, how do you get skate to the puck where it's going, not where it's at? So, Mr. Brian Hale, I can only assume that you have met with a lot of C-suite executives through your weekly roadmap. You're talking with lots of loan officers, providing a lot of leadership. What's the signal? What are the things that folks should be paying attention to right now?
Well, first and foremost, they ought to be paying attention to the fact that I'm about to have a birthday here next week and turn the big 7-0, man. I am crossing the Rubicon, as it were, right? So I'm sure that's where most people's heads are at, is Brian's birthday. Not, right?
Well, wait. I don't know where you're going to go with that, but I do want to call out. I turned 61 several weeks ago, but I do hope you're picking up, if you're, whether you're younger or older, the energy this man still has to bring leadership. And the only way you can have that kind of energy and that kind of passion to bring leadership is if you're doing the right things with your life. So anyways,
Well, look, I hope I'm doing the right things, and I do have a lot of energy. And I always get asked when am I going to retire, and the answer is I suspect they're going to carry me out of here someday. But I still enjoy the business, enjoy the industry, enjoy trying to add value, enjoy working with folks like you. And so I'm here. So what am I hearing? Um, I don't know if I would say I've heard this and I'm hearing this a little bit, but I'll give you my perspective a little bit on what people should be thinking, which is the cavalry is not coming this year, right? I can't believe you just said the date today, right? The 26th. We're creeping up on August 1st. Can you believe it's August 1st, right?
cannot believe it's August
2025,
1st.
right? And so just think about this. About 60 or 90 days from now, all the apps you're going to take and close in 25 are going to be taken, right? So, even if rates drop in the third quarter, fourth quarter, whatever the case may be, which could happen, but I'm not particularly optimistic on that side. Um, we is what we is. That's a little bit of what I'm hearing, right? We is what we is, and we're kind of moving into strategic planning season. So actually, this week I'm working with another client on in their exec team, kind of putting together their thoughts, helping them put together their thoughts on growth, on revenue, on expenses, on what ifs, right? What if rates don't come down for another year? What if rates do drop? What if rates, what if you get kind of this mishmash market? The second thing I'm hearing, um, the builder trick, not a trick, the builder approach of using deeply discounted money seems to be running out of steam a little bit in terms of generating sales, right? We saw builder sales volume down. We saw existing home sales sub 4 million for June, right, on an annualized basis. And so it's interesting. I've been reading, some of the earnings reports from some of the big public builders, and you saw Pulte, I think, just announced where their incentives on the average house sold, which is north of 500,000, has gone from 3.8% a year ago to 8.4%, owing to the amount that they're putting into forward commitments and buying the rate down and doing those kinds of things. And still, volume is slowing. I think you're going to see a rash of M&A in the home builder space here in the next year.
Yeah.
Smaller to medium-sized builders who finance their projects through local or regional banks are finding all of a sudden those banks are not rolling the lines over. They're getting a little nervous about the sales pace in their existing communities. The big guys don't have to worry about that, but clearly volume is down. And I think to some degree, Dave, there's a sense. Two conversations I had this week with top producing reps, and one with your friend Lacey Newman, who was on the weekly roadmap on Friday, this past Friday, um, talking about what's really going on in the market. And one of the things that she and other folks that I've talked to have really commented on is this massive consolidation to the top 20%, 15%, top 10% on the real estate side, as well as on the mortgage side. And you can see it. And by the way, I'm talking about it at a rep level, at a realtor level, right? In the communities, who's actually selling real estate, who's actually producing mortgage volume, and this massive consolidation to folks who have a plan, to folks who are working with math, to folks who are using data to identify their opportunities are winning. They're winning big. And I know those are a lot of strategies you've been talking about for 25 years, frankly, or longer.
Well, I think both of us have been talking about those for
Yeah.
most of our careers. We're both data-driven leaders, and I'm interviewing enough people that are just, I mean, really thriving. I mean, closing a
Yeah.
lot of business, and it's like, what are they doing? They're solving problems. They're listening to consumers. Every consumer has a different goal. Every consumer has a different assumption of what rates are going to do, what they think appreciation rates are going to do. They're asking, they're listening, and then they're solving one family's problem better than other loan officers. And they're
Yeah.
communicating it to that
Yeah.
consumer better than their peers, and they're winning.
Look, I mentioned I had Lacey on Friday. What I asked her to do, as for those who may not know Lacey Newman, she's a top one, maybe top 1/10 of 1% agent, big team, a coach of many other agents right out of Nashville, Tennessee. Just an unbelievable, spectacular superstar from my perspective. What a presenter. I just was blown away, right? I saw her at your event, but man, she's really good. And I asked her to focus on talking to sales reps in the mortgage business about calling on people like her, right? Don't call me and take me to lunch. Don't call me and leave me a voicemail and say, hey, could you call me back? I have no time to call the people I need to call back. I'm certainly not going to call you back, right? In the process. Value add. She has this great, and I don't remember the four letters, forgive me, but it's TLDR. TLDR. Too long, didn't read. Right. Right. Some, 500 word text or email, or somebody sent her an Excel sheet or whatever. She goes, I don't do Excel sheets. I don't do data. I don't do those things. Right. And so about the approach to people who are actually producing real estate sales, because she and I share this view that if you're a rep today in the mortgage business and you're calling on a realtor who's in the bottom 40, 50, 60% of the agents in your market, the reason you're not getting any business, it isn't because they don't like you. It is because they don't have any sales. They have nothing to refer. So back to using data, identifying the right people, having a plan, having an approach, Jeremy Forcier having a script, right? And an approach to these things. Those are the folks who are winning in this environment.
Yeah, no doubt. The other thing since we talked last, I think the last time we did this leadership message, it was at the gathering in Colorado
Correct.
Springs in June. Again, it's been a while. We're now a couple weeks from the AI summit in Dallas. By the way, are you going to be at the AI summit in
I'm
Dallas?
not actually. I'm going to be at California MBA Western Secondary. I'm actually speaking at that event, and we have some of our folks there
Good.
on the
Well, that'll
originator
be
side. I'm disappointed that I can't go to the AA summit. I would have loved to have gone.
Yeah. Well, I'm going to be there. If you're an executive and you want to meet up with me there, just send me a text, shoot me an email.
By the way, if you're an executive and you're going to be at California MBA Western Secondary, come from myself, Maria Elena, Heidi Iverson, one of our team members will be there, and we have a table right outside the meeting hall. So feel free to stop by.
Yeah, and or text and message Brian and get something on the calendar.
Yeah, absolutely.
But but where I was going with that is last year at this time, there was a lot of what AI is gonna do and how we're gonna use AI. And this year, I mean, there's stories around how AI is driving profits, how it is being used. We actually rolled out Mortgage Coach with AI so that now a consumer can go to a Mortgage Coach total cost analysis and say, by the way, they don't have to even have typing skills. They can talk to it and say, what's the lowest cash to close? What's my equity on month 26 for option two? If I'm going to live in the home for 2 years, what's the best option? What's the difference between lowest cost over time and lowest rate? I mean, whatever that consumer is thinking, they can say it. It will answer that question for the consumer in an instant, and the loan officer will know what they're thinking. And so That's our innovation, but there's a lot of innovations that are taking place. And then I've also really upgraded how I'm communicating. So you made that whole point too long. Like I'm talking to ChatGPT that I've trained. It knows my personal brand. It's got my personal code in
Yeah,
it.
look, I happen to use Perplexity, but I get it.
Well, by the way, I use Perplexity for research,
Right.
and I
I
use
use Perplexity. I just used it on Friday to draft a solicitation out to mortgage bankers who may want to have a strategic conversation about becoming, part of something larger. You get my drift?
yeah,
And I put in, told it what it was. It was an investment banker in the mortgage banking business, right? Looking for folks who might be interested in a strategic conversation. Ready to go. Boom, out the door.
yeah. And then in the words of simplification, could you take that and make it a 15-second script? Could
Yes,
you turn that into an email that can be read in 25 seconds?
yes.
Use it to simplify, use it to make you more efficient. Also, another AI platform I'm seeing a lot pop up in our space is Who's AI, which is really for real estate agents. So, Brian, what else are you seeing when it comes to AI and anything else you're doing that you want to share with
Well,
everybody?
I don't know that I have the kind of descriptive stories you do on AI. What I do know is there's an immense amount of money being spent on AI. I worry a little bit that there's going to be a lot of wasted money spent on AI where people haven't really sat down. I think one of the biggest mistakes in the mortgage business, it's been this mistake for 30 years. Um, People go out and begin to acquire technology without first starting on the whiteboard and saying, what are we trying to do? Right? And then what's the customer journey right through our operation? And where can we enable the journey through technology? And then what is that technology that we need? And then how do we become the orchestra conductor to the symphony of these engines and sub-engines and mezzanine engines and AI and all the rest of these things? And so I once had a CIO when I ran MetLife, when I was the president of MetLife Bank. And he said, what happens here is people go out and buy 7 washing machines and then they call up IT and say, could you come up and hook them up? Right? Where IT wasn't part of the conversation at the beginning, senior management wasn't part of the conversation. Some SME is doing this work. And then all of a sudden they spend $5, $10 million and it doesn't work.
So let's drill down on that. And I'd love to just go back and forth on this because this is something that I'm seeing, especially now that we're getting close to strategic planning season. I'm actually doing strategic planning next week with the Trust Engine team, but there's a lot of things that a lender can do, a lot of technologies that they can buy. And obviously, AI is sexy. But to me, they're not putting a strategic roadmap. Like, what's our AI
Correct.
strategic roadmap? And then they're not looking like, hey, what are all the things we can do? And then what of those things we can do, what is the ROI on those things? And
Right.
how are we going to measure it? And it doesn't seem to me like one, they're kind of like putting out the roadmap, like in the case of Mortgage Coach, hey, like Mortgage Coach is on the list. How can we measure it? Oh, we can just look at credit reports versus closed loans. We can look at gross margin for the loan officers, the cohort that use Mortgage Coach, and we can determine that's the value of really getting our loan
Right.
officers to put a Mortgage Coach on every credit report.
Right.
But I find them prioritizing other things that one, they can't measure as well as they can measure us. They don't know what it is. What's your advice to executives when they're doing strategic planning or road mapping? They're deciding, hey, do we get Mortgage Coach now or do we go
Right.
something
Well,
else?
the first advice I would have is they should bring me in to help them with their strategic planning. So let's start there, right?
All right.
But, and a little bit of that is just building in a protocol to strategic planning, right? I think people show up to strategic planning and, all right, what do we want to talk about, right? What are we going to do? How much are we going to close, right? They start there and, what's our market share and what's our revenues and can we improve, right? And they start putting all these different metrics up without what are we trying to accomplish with the customer and our referral sources. I would say one thing, Dave, and I try never to argue with the speaker on this call particularly, but do you know Bill Emerson, who's at Rocket?
I've heard the name.
Yeah, so he was the CEO of Rocket for a long time. Really smart guy. He's still
No,
there.
I
I think.
know, I know, Bill.
Yeah,
Yeah.
he's in a different role now within Rocket, and obviously with everything going on, he's kind of up at the holdco. But I was in a room with Bill once, and he was talking about ROI and how Rocket thinks about ROI. They
Mm,
clearly think about it, but you know what trumps ROI? No pun intended. Customer experience.
mm,
And so if you have maybe an outstanding piece of technology or strategy or process, whatever that you think you want to deploy, and it's going to take friction out of the process, it's going to help the customer or the referral source, whatever the case may be, but it may not meet your ROI target goals in terms of hurdle rates. Do you do it because, oh, it doesn't meet ROI? Or do you favor your customer with a voice of the customer in the room to say, yeah, this is going to make my customers like us better? Could you maybe extrapolate that out to an ROI calculation? Sure, with about 14 assumptions, right? Which we kind of know how that works a little bit. But having a bias to reduce friction, I mean, clearly, look, I talked to Jay Bray briefly at the gathering, and clearly, that whole trioca of Rocket and Mr. Cooper and poor,
Redfin.
yeah, Redfin, right? There is an immense amount of thinking going on. How do we take friction out? How do we make the experience better? How do we speed it up? How do we not be redundant, right? Those kinds of things. And some of those things probably have ROI, but you have to assume you're going to do more volume, you're going to gain share. So some of those assumptions get a little fuzzy. But their central theme is make it easy to do business with us, make it easy for the customer to give us their money.
So let's create a little framework between you and I right now, because you said something that it's easy to put ROI, like, hey, what's that going to cost us in basis points?
Right.
What is that going to, improve
Gain.
profitability in basis points? And remember, with a mortgage coach, it's real easy. Credit report, close loan, gross margin for a cohort that does it. But what if you had a score for ROI and your ability to measure it? You had a score for CX, customer experience, let's just say 1 to 5. And then you had WX, work experience. And for IMBs, the
Yeah,
loan
yeah,
officer is
yeah.
debatably the customer,
Yeah.
like, and you literally had
Well,
those
look, and I think not just the loan officer, the processor, the underwriter, the closer, right?
right,
All those folks,
the
right?
work experience.
Right, exactly.
And so you literally and you had a score of all three of those. And I'll bet you most lenders don't like, okay, this is our roadmap. In every strategic move they're going to make, are they putting in a score for WX, CX, and ROI?
Yeah, no.
And
The
then
answer is no.
attacking
Yeah, the
the
answer is
things.
no. Yeah.
So, by the way, anyone listening to this, Brian and I just created innovation for you. If you are doing this, let us know. We personally want to know about it. And if you're not doing this and you like what we just talked about,
Call one or both of us and we can help you talk through it with your team, right?
yeah, yeah, that's awesome. Man, I think we just came up with an innovative strategic planning framework that we need
Right.
to roll
And
out.
look, and I'm a kind of a slave to data and math and that kind of thing. But I do think, Bill's comment about, put the voice of the customer in the decision room. And if you ask the customer, would you like less friction or more friction, right? Would you like to have to, do 16 clicks on our website versus one, right? Those are the things that I think long term are going to win. To your point, you're using voice, right, for some of your products. People are going to want to use voice. People are going to want to think about it. And it may not be in the 3 year window that you're calculating ROI to present to your board. It may not be exactly the hurdle rate you were looking for, particularly if you're private equity owned, right? Because they tend to have very high plus 20% hurdle rates. And that's a hard thing to get to in a hurry on this stuff. But the flip side of that is, are you getting left behind?
Right,
Are
right.
you more friction to your customer than your competitor is?
Have you heard? I heard rumor, but it wasn't a good, reliable data source that last year the average age of a first-time home buyer was 38, and
39.
I heard rumors that it's going to be above 40 this year.
I think it will be.
Do
Look, and
you?
it's a little bit of statistical anomaly though, just so I mean, people shouldn't, it's not so much that people are waiting longer. I think that's been reported in the press a lot, right? The 25-year-olds who just got married aren't likely waiting to 39. They're simply not buying. So the data weights up average wise to the person who's maybe buying their second home or, even on
No,
the
but this first-time home
no,
buyer.
no, but even on the first time, right? you've got a whole cohort that is maybe thinking, you know what? I don't know if I want to own. I think I want to rent because I work from home and I want the flexibility. I don't want to be locked down to one place. My oldest son just got a huge new job. He was the head of technology infrastructure at Bell Helicopter, and they're owned by Textron. He's moving up to an executive director at Textron to take over all of the Textron enterprise-wide technology projects, right? He's a guy that's 36 years old. Now he happens to be a homeowner, but they're going to move to Providence, Rhode Island from Fort Worth, Texas. And, they may rent for a while to see what's going on. He has a lot of folks who work for him in that cohort age who rent because they might be a contractor to a technology company and they don't know, man, am I going to be here forever? Or is my next job 1,000 miles that way and I don't want to have to deal with selling a house? So I think my only point is I think there's a lot that goes into that number that may not be obvious.
So let's make another framework right now, because we've historically in the mortgage industry been in the business of finding loans, winning loans, defending. And when I say defending, it's like just because you took an app doesn't mean you got a loan.
Right.
You gotta
Exactly.
you gotta defend. I mean,
That's never more true today.
yeah,
Right.
there's gonna be a credit trigger. They are omni shopping because if they Google mortgage, they're getting
Well,
retargeted. So
look, on top of that, cancellation rates of homes under contract just hit a record high this past month.
so there you go, win. So find, win, defend. I think there's a new framework. It's called create. Like we need to be in the business of creating loans. We need to be in the business of identifying the people in that market that are 36, and then we need to be in the business of showing them that look at home ownership. What's your assumption on rates? What's your assumption on appreciation? And don't wait for them to click. Like reach out to them with data stories around how they could move up and make more money, how they could go from
Think
renting.
about how you leverage that potential client off to your other referral source, the top referral source, so you're partnering with that person, helping them build their business as well, right?
Yeah. So C for create, F, win, defend. It's got to be in the creation business, and you need to make sure that you're using, obviously, here at Trust Engine, Mortgage Coach Next Gen. I mean, we built it to help create loan ops. So, Brian, if you were to predict interest rates, which I know you're not in the predicting of interest rate business, but you do
I have
have,
a view.
yeah, give us a take. Where do we end? Where do we go next year? What's the Brian Hale forecast?
Yeah, absent some existential event, right? War, famine, right? You know, COVID-4, right? Whatever the hell it is, right? Um, Absent one of those things, I think we end the year at lower rates, not lower enough, right? I think you'll start seeing a little bit of a pop around the edges on refis. You might see some acceleration on purchase volume, and by lower enough, by the way. I mean, you can see if we're sitting, let's just say at 6 3/4 today or 6 7/8, somewhere in that range. You get down close to six, you're going to see a pop in volume, no doubt. You'll see a pop in sales, you'll see some refis. But to really accelerate the market back to a 5.5 million home sales a year level, which is a more historical level versus the 3.93 that just got printed for June, right? Um, you need to see a five handle on the front end of that 30-year fixed mortgage rate. So I do think we see somewhat lower. You look at all the data, right? Job openings are down. You're seeing layoffs, particularly in the tech sector. Um, there's a lot going on in the market that would suggest there's cracks in the underlying economy. Now, the flip side is there's a bunch of data points that say, hey, the economy's just fine and booming. What we can't yet figure out is, was Q2 a pull forward quarter where people were trying to outrun tariffs and buying and bringing in inventory and shipping stuff in and those kinds of things? That's what the Fed's waiting to try to find out. I do think the Fed will move in September. I think you're going to see a cut in September. I think you might only see a quarter. I do think there's at least two cuts this year, maybe September and December. Who knows? But remember, folks, when the Fed cuts, it's on the short end of the curve. It may or may not materially impact 30-year fixed interest rates or the 10-year treasury, right? And God forbid, the market reads it as a political genuflect for the Fed cutting. You could see 30-year fixed interest rates go up, not down. And what you've seen just over the last week, There's been a bunch of data in the market that should have moved the market positively to lower rates. It did, and then over a day or two, it lost all the ground it gained. Right? So
Yeah,
there's
yeah,
real reluctance, there's a resistance level in there at certain interest rates where the bond buyers are simply not buying. Ergo, we continue to be higher for longer.
yeah. And I'm currently, guys, it's July 26th right now in my Rate Watch app, my trust engine. I'm looking at the Optimal Blue Mortgage Market Index, and it's 6.751 on conforming. It's 6.990 on 30-year jumbo, and 15-year forming does have a five handle. It's
Yeah, look,
588.
yeah,
So
look, I said 6 3/4, so 6 3/4.
yeah, no, you
And
nailed
I
it.
was
I mean,
way off.
you nailed yeah, no, my point was I wanted to validate, like that's what it is. That's what time it is. We'll keep bringing you content like this. Uh, Brian, roadmap. How are things going at the roadmap? Who are you going to have on as your next guest? Like, what's happening?
Well, actually, we have Nicole Ruth coming on,
Ooh,
which is, she's just a killer, done a phenomenal job. And I was just
number
looking,
one loan officer in the state of Colorado, guys. And by the way,
right?
Nicole is creating loans. She's
Yes.
not just winning in finding and defending. She is creating opportunities. Follow her on social media. She is just one of those leaders that has completely future-proofed her business.
And I'm rapidly looking for a date. That's forgive me for staring down at my phone. Um, Joe Massey, who I know I think I had an opportunity to introduce Joe to you.
Joe is a creator. Joe is
So let me just tell you. So we're doing a master class, and before we get off this call, I'll know the date. I just didn't want to keep looking down. We're doing a weekly roadmap master class coming up here in a couple of weeks with Joe Massey. Joe wrote a book with a partner about how to help or how originators can help realtors embrace AI in their business, thereby creating sticky relationship with the agent and obviously referral opportunities for Joe. So to your point about AI, that's a top producing originator moving his referral partners and agents both through a book and through personal counseling, and we're going to bring them on for a master class. We've already got hundreds of people signed up. We just announced this thing, and so to your point, creating business by helping your referral partners do more business and helping them move their business into the age of AI. What a fabulous strategy.
love it. So by the time we are on this next, we're going to be at least mid-August, maybe the third week in August. Anything you want people to know, knowing that they're not going to hear from the two of us until then?
Well, first of all, we can shorten that up, right? So if we have stuff to talk about,
I know, but I'm just setting the
yeah,
stage,
no, no.
like
Well, look, first of
Brian
all,
Hale leadership,
yeah, you hit it on the head. Companies are moving into strategic planning season. Originators should be moving into strategic planning session, right? Season, right? And begin to think about what went right this year. What out of your plan for 2025 were you dead on and you want to continue and replicate into 26? What did you have that didn't work? What do you see producing more loans? What do you see costing you money? What do you see? Oh, look at that. We tried something, it didn't work. And you should put a nail in it, right? Because it's just not the right answer in the marketplace. And begin to develop so that you see yourself as the CEO of your business without regard to who you work with and for, right? And you've got now 4 or 5 months leading into 26. We know that loan apps taken in October, November, and certainly in December are 2026 production in many cases, right? So it's coming up on you. The year is coming to an end and the new year is coming quickly. What strategies are you going to continue to embrace? What new strategies are you going to look to embrace? And how are you thinking about this within your business?
I love that. And my kind of closing thought is, going back to that work experience, that customer experience, that's going to give you the most ROI. I want you to, between now and then, look at the tech stack you have, look at what's on the roadmap, put a score around WX, CX, and ROI. And what's the one thing, like if you just focused on one thing that would move the needle, make sure that you've got a good plan around that one thing. I'm going to share a link down below. You're watching this. I did a LinkedIn post about 2 weeks ago. I'm looking at it right now. I'm going to put a link to it where we did this. We did this with Prosperity Mortgage, home mortgage, where we focused on one work experience, one customer experience, and we put a quarter's worth of effort and we literally 3x'd the results. So I'll put a link down below
Right.
for that.
Dave, and if I could provide you a link, I do have the date, by the way. Joe
Oh, let's
Massey and his
go. Let's
Masterclass on
go.
AI for Realtors is Tuesday, August 19th. And I'll be glad to have Maria Elena send you a link or a QR code that you could, publish as well. If people who want to register for it, by the way, it has the notable advantage of being free, right, in the process. So it's Tuesday, August 19th. Joe Massey will be producing this masterclass. And to be blunt, I'm going to introduce him and let him go.
Cool. And I am posting that link. I just let Paul, my executive assistant, know that get a link for Brian. You have that down below. A link to the post that I did that I'm referring to. And I made a little 6-minute video kind of walking through the work experience, the customer experience with an ROI score. And Brian, really appreciate you always making time to do this together.
Anytime. I hate it when we miss or get, conflicted by schedule. And on a serious note, if things, I think you're going to begin to see things pop up here again, a la the Rocket, Redfin, Mr. Cooper type deal. And so if something really hits the market that is significant, we should pop back on and do another 20 minutes. And it doesn't have to be on a particular cycle.
Let's do that. So if you have a question for Brian and I, put it in chat, text, comment on social media with the two of us. If you're going to be at the AI Summit, ping me. I'm actually the day after the AI Summit. I'm going to do a half-day mastermind with some executives that I've invited to join me in a room. Haven't decided exactly where I'm going to do that yet. Prime Lending is looking like they're going to host us in their conference room, but I don't have that confirmed. And if you are going to be at Western Secondary, make sure you ping Brian. Make sure that you're part of everything that this man does. Brian, super grateful, brother.
Thanks, Dave. Always, always a pleasure.
Take care, everybody. This is a wrap.